Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action on the D Street as well as the trading strategies and the market moves that you must be tracking today. We always will start with the wrap up of what has happened yesterday so that we give you enough cues to understand what is being seen as the trade setup. So the Nifty extended its losing streak for the fourth consecutive session on Monday, weighed down by the tariff tensions that dented the market sentiment. Now, despite the pressure, the index did manage to hold above the psychological 25,000 mark, closing off the day's lows as well. And the advanced decline ratio and the broader markets also picked up pace in the second half of trading action. But the question is whether these lower lows are being protected. That's okay. But what about the higher highs? They are definitely seeing some limitations as well. Now, when we talk about the macro data, that's going to be important for us to track. Remember, India's June CPI inflation data is going to be impacting the market moves today. China's Q2 GDP data, US June inflation figures, Q1 earnings, US President Donald Trump's tariff threats again coming in as a key watcher for the markets to watch out for. Institutional investment trends and the mixed global cues will also be impacting the markets today. Remember, India's retail inflation has eased further in June, coming in at 2.1%. Now, of course, we have been seeing this is on the back of the declining food prices, and a favorable base effect can also be seen here. And this is the first rare decline that we've actually seen in the 6 years time frame as well. Wholesale price index, in fact, has slipped into the negative territory for the first time in 20 months too, now by contracting about 0.13% in June. So that's going to be important as well. Now, on Monday, we did see the US markets, they ended higher with the S&P 500 ending up by about 0.1% in trade. We also saw the NASDAQ composite 0.2% higher. Also, the Dow Jones that added about 0.2% in trade as well. Now, what's also important is that Donald Trump has again threatened a 100% secondary tariff on Russia's trading partners as well. How will that play out is something that we will keep a watch on. Now, India's Commerce Ministry team has already reached Washington for another round of trade talks. Now, this 4-day trade talk is set to end on Thursday. So, all eyes will be on as to how, the kind of trade talks progress. Will we finally see a deal after Thursday's negotiation end as well? Asia Pacific markets trading largely higher, shrugging off the uncertainties around tariffs at this point in time, and the gift nifty is also indicated to a positive start at this point in time, although mild at 25,172. That's something that we will watch out for. But let's welcome our guest on board. We are now joined by Mr. Dharmesh Kant, who is joining in from Chola Securities to share with us his views on the markets. Warm welcome to you, Dharmesh, and good to have you with us. Well, so much to talk about again, both domestic as well as global cues that are shaping up. Let's start off with domestic for a change. The macro data that's coming in on by way of inflation, and how are you looking at this ease on both retail as well as wholesale inflation data? Does it point out to further favorable policy outcomes that could come in from the RBI as well?
Yeah, good morning, Sakshi. I think you have summed up all the points, macro points very well. As far as the inflation is concerned, this is more to do with the food inflation, and food inflation is more of a function of supply rather than a demand kind of a scenario. So I think with supply ease and this time the monsoon being very well spread rather than concentrated kind of a monsoon downpour, which actually leads to higher food inflation. So that has played out well. And the progress of monsoon has been even and quite widespread going into the July. So the expectation is the July inflation CPI data would be further lower. I don't think this is going to move a needle for RBI as far as policy is concerned. So they have changed their policy from accommodative to neutral last time around. So August, I don't think they would soon jump and again change the policy stance or a rate cut coming into play. Having said that, one more factor which has to be, kept into mind while analyzing all this data is, despite of lower interest rate and conducive disposable income through tax incentives and everything playing out, the demand has not been there in the system, and that's the reason why we are not seeing a pickup in the market the way this macro tailwind should have impacted the market. So we have to wait and watch. I mean, one more month will go into ascertaining the fact. This is the domestic demand I'm talking about. So still there are no signs of revival out there. I mean, see FMCG numbers or consumer durables or even vehicles, automobile sales, everywhere has been sluggish, though the cost burden has come down on the consumer. So, to my mind, I mean, tailwinds are getting stronger and stronger, and there is not much downside to the market because of these tailwinds which are there, the macro tailwinds. And market will see the numbers of Q1, which is likely to be muted. But Q2 onwards, we see a revival in the market. So this is a time to go into your cherry picking and sector picking. So be mindful of the companies you are buying because there has to be a clear-cut, sustainable growth trajectory out there. So net, we are buyers in decline. So whatever decline this market is offering.
Okay. Now, Dharmeshji, help us understand when it comes to the global picture at large. Again, the tariff talk is taking center stage because, again, Donald Trump is threatening for higher tariffs, even on those secondary tariffs for those who are the partners of even Russia. That's something that we are watching out for. What's happening with the retaliation that's being talked about with the various countries that have been imposed these fresh tariffs is also another point that we are looking out at. The other main factor is that our own delegation has again reached Washington to probably iron out any last bit of probably issues that still stand out in the way of having a US India deal into force. What is your fresh stance here? Have the markets got tired of an everyday tariff talk and therefore are they paying less heed to it? Or do you think we are lacking any kind of a fresh momentum which is preventing us to move out from the consolidative zone in the markets can only be triggered once the US India deal is done?
So actually, I would go with both. I mean, one is market is getting tired with this tariff kind of scenario. At the same time, there is no fresh triggers for the market to go up because all the markets, mind you, are on all-time highs. Be it US market, India is also near the all-time high. Europe, you see how the rally has been in Germany and South Korea indices. So DAX and Seoul Copsy is also trading at fresh highs, almost 30% kind of a gain has been there. One thing which was clear from if you look at the global markets is that the manufacturing companies, be it say Germany, South Korea, or even China, those markets have done particularly well in light of all this tariff, mess being created. So we have to segregate one thing. First is tariff. You're looking from the US perspective. So they are the beneficiaries because the tax collection has gone up in US, and it's not only imposition of tariff. At the same time, if you see the currency depreciation of euro and GBP as to US dollar, so they made the imports really expensive and domestic manufacturing competitive. So it's working well for US, and that's the reason why Mr. Trump is trying all kind of tactical moves which he can to ensure the protection of domestic and ensure US domination of the global economy. So that's a separate part. But that's playing well for the US market. At the same time, the other markets of the world, because of their getting segregated from US focused economy to other economies, like see the trade terms between India and Russia. So while imports from Russia has dramatic for Indian consumption, and but that is where the things are getting resettled. As far as India is concerned, I do think that by Thursday we should have an outcome, a favorable outcome on the tariff front. And even if Mr. Trump imposes tariff on Russia and the trading allies of Russia, India may still have a getaway out of that, and that is what is keeping the hope alive. So globally, fundamentally, if you look at the headline numbers or the macroeconomic lead indicators, nothing has changed. Be it US bond yield, be it crude oil prices, be it commodity prices, be it the policy rate, the inflation trajectory, everything is progressing except that imposition of tariff and the delay in getting it actually implemented and the time is being bought into. So market are taking it in the stride. Again, if you, my only advice would be you segregate yourself from this tariff kind of announcements till it
Yeah.
actually impacts the market and keep on playing with the market on the fundamentals of the companies.
Okay. Let's come back to our micros then. The earnings season that has kick-started on a rather tepid note, Dharmesh ji. It started off with TCS, Tata Elxsi came in, we have Tata Technologies, at least 3 or 4 stocks from the Tata group itself have come out with the numbers and will come out today also. And of course, HCL Tech now has come out with the earnings again from the IT pack. IT again was a major drag in yesterday's trading session as well. Of course, as the top loser. HCL Tech has posted an earnings miss on the margins for sure. They have also downgraded their margins guidance to now 17 to 18%, down from 18 to 19% earlier. They're citing lower utilization and increased investments in Gen AI and go-to-market initiatives. Although the top line positive can also be looked at. Right now in the pre-open trade, you can see a 2.3% downtick on HCL Tech. For FY26 revenue, their guidance they have slightly raised to 3 to 5% from 2 to 5% with inline expectations there. How have you understood the kind of earnings that have come in? What would you do with a TCS? What would you do with an HCL Tech, sir?
So actually, the problem with all the IT companies is we are trying to find out positive and trying really hard to dig and get triggers which should justify the glorious future of IT companies. I think they already had a glorious past, but future is under question mark. Unless they come out with some kind of a disruption, I don't see their earnings growth in double-digit kind of a trajectory. So that's one fact which the IT companies are facing. I mean, the mainstream software service providers or platform providers from the software point of view. So these companies, all the top tier, the earnings was a washout. There's no two ways about it. Even still take the numbers were not great. It was a bad set of numbers. The deal wins was low. Tata, TCS, the same thing. Tata Elxsi, the same thing. Tata Technologies did hinted with a positive bias when they said Q2 onwards, things should start looking up, and that's a natural flow because for Tata Technology, automobile technology is the main bread and butter for that company. Around 80% of the revenue comes from that. And last 9 months, there has been a marked slowdown. It can extend to one more quarter since the tariff uncertainties are still there, but it's likely to get sorted out in favor of Tata Technologies and their deal wins with, say, BMW or a Volvo or Airbus. These are large, tie-ups and very sticky tie-ups, which can, finally multiply into larger volumes. So for that company, we are positive. But the fact remains for technology companies, max to max PAT growth you can see in reported INR terms, 5 to 7%, and a consistent kind of a flow if they are able to maintain. That's the only silver lining to that. Unless they can come out with some disruptive product which takes it further, which we don't see happening. They're still struggling with generative AI and trying to figure out products which can match up with the competition and get balance out there. So I have been skeptical about entire technology space for last 1.5 year. In between, there was a run up, and then again the correction has happened. So stay away is the only advice which I can give on frontline technology companies. Engineering research and development you can look at from a long term perspective, and there I think Tata Technologies does merit a chance for buying at current levels.
Okay, got that. So that's the technology companies and what we expect there. The markets have settled in the pre-open trade, 7 points higher at 25,089. Let me just look at the key sectors that could be in focus. Pharma could be in focus, opening up higher. Real estate, consumer durables could also be opening up. We could also see some gains coming in on the mid and the small caps today, as is being indicated in the pre-open trade. Although the banks, along with IT, could again be a lagging space in trade today. Sun Pharma could be one of the top movers. L&T, Geo Finance, I'm looking at all of these stocks that could be opening higher. HDFC Life, Apollo Hospitals, Hindalco, Bajaj Auto, they could be opening up. Eternal could also be inching further up after yesterday's strong move. But HDFC Bank could be down. Infosys, HCL Tech could also open on the back foot. You could also see names like Maruti that could be opening lower in trade. So that's some of the indications that we are getting from the pre-open trade as of now. Let's discuss beyond IT, where exactly are the opportunities being found. Have you been looking at the defensive space of late, sir? Beyond IT, say pharma and FMCG. We'll talk about both these sectors and try to understand, what is your fresh perspective there. On the pharma space, of course, there are so many brokerage houses again are focusing their attention back on the pharma pack. There are newer order flows coming in. There are newer approvals from the US FDA that are coming in as well. The companies are also increasing their focus in fresh R&Ds as well. How would you look at the pharma story, and which are your top stocks here?
So actually, what happens with the pharma space is couple of good news, and everybody starts
Yeah.
with the herd mentality. And whatever is there in the pipeline that gets highlighted, that even this can materialize in a positive way. So, I mean, that is the thing which is happening with the pharma place. Trading place can still be on there because the other basket like IT and all is not performing well. So, money has to be parked somewhere on a hope trade kind of a basis, and there the hope looks more better. Having said that, the entire pharma space, if you look at on a valuation multiple basis, they all are expensive. None of them are cheap, and the consistent CAGR can be around 15, 16%. So tariff announcements here and there keep on coming, but Indian pharma companies are mostly a generic player or API or a CDMO kind of a player, which is will be least impacted by any tariff flow. So their valuation comfort has to be seen into wherever there is a valuation comfort and you want to be into that space, then one can choose. And to my mind, two stocks which stand out just on the valuation basis and the consistency of the earnings are Arvindo Pharma and Natco Pharma. So these are the two companies which one can look at buying at current levels. Otherwise, balance, it's more of a business as usual and trading place. And be very mindful of, fresh buy reports which are circulating around
Yes.
the pharma space.
Absolutely. So be aware and, just don't go by what's actually coming in immediately. So Natco Pharma and Oro Pharma, two picks that one can still look at, but I'm going to be read up some brokerage houses ticks as well. Sun Pharma has got an overweight rating from Morgan Stanley today, a 1960 kind of a target. They have talked about how Sun has settled the US patent litigation and has also launched a drug in the US. They also have got a license to sell non-oncology uses, kind of insight that has been granted that from the US as well. Overall, the view of the US launch is positive, is what they say, and settlement with insight is also as a positive, they say. Now, in the diagnostic space also, Dharmesh, you could probably give us your view here. How are you looking at the diagnostic space? Divis Laboratories today has again got a overweight rating from Morgan Stanley, a target price of 7,185. Currently, the stock is at 6,800. They believe that Novartis had previously guided that generic competition to Entresto could start in the US in mid-July of 2025, and their EU team is building an 18% year-on-year decline in the US EU, sales of Entresto in calendar year 2025. So, in line with the global estimate, they've built in a decline for Divis as well, but they still have an overweight rating at 7,185. Let's understand what's happening on the diagnostic chain spaces, sir.
Yeah, diagnostics again, I mean, nothing new happening out there. Competition is, hitting up even there as well. A lot of competition from Tata Group of companies have entered there, and the prices are falling. So if you look at the blended realizations, they have come down, but volume growth has been there because if now doctors they preferred first a diagnostic, a checkup done, then they prescribe medicine, and that's the natural volume growth which is happening out there. But we don't have any buy rating on the entire space. We are just, watching it from the sidelines, keeping a track on that. But as of now, value-wise, yeah, I mean, wealth creation-wise, we don't see an opportunity out there in the space. So we are just having a neutral stance on the entire space.
Okay, got that. So that's the farmer story. How about FMCG, sir? Have you been looking at this fresh up move that we are seeing across the board? Is it only because the market is lacking any kind of a positive trigger which can actually concentrate our focus on some of the momentum-based sectors, and therefore the investors are looking forward to FMCG, or have things really changed for this beaten down sector for FMCG, sir?
I don't think so. Things have changed. I mean, this is just a momentum trading play which this sector is witnessing in light of the present market scenario. Definitely,
Okay.
there would be some uptake in the volume growth and the relation growth. Their profit would be a tad better than what they have been reporting, maybe 5 or 4% kind of a growth. You can go to 7-8% kind of a growth. But the point, Sakshi, here is that look at any FMCG company, be it HUL, Nestle, Britannia, Colgate, Gillette, whatever pick you want to take. Every company is trading over a PE multiple of say 55, 60 kind of a PE multiple they're trading. PAT growth, the best you can expect is say just touching a double digit 8-9%. That's how, I mean, best case scenario you can see with ROEs of 15 to 20%. So, I mean, why would you like to buy a FMCG company where wealth creation is a big, big subject? It can consolidate sideways, it can give you trading place, and I don't think the coming decade is will be the same as the last decade for FMCG companies because the penetration level has already been through and through. So there's hardly any new areas or geographies which these companies will capture and where that inorganic volume growth will come through. And the local competition is heated up. So look at actual, they bought minimalist. So this is the kind of thing which they have to resort to maintain their current level of volumes and market share. So to my mind, as a trade, yes, because of inflation is down, rates are down, monsoons are better, you can play it as a trade. But other than that, I don't think if you want to keep it for 2 years in your portfolio is a right choice right now.
Not a right choice right now. We look at the markets now. It's 9:15. The markets have started to take on a positive note, 2/10% higher for the Nifty. You can see 25,140 now coming in on the markets. Let's look at the sectors. I think all the sectors have at least opened in the green, and that's a big positive. India VIX is down by about 0.6%. That's the only index that's down. So you can actually look at a whole host of positives on real estate. That's a 0.5% uptick. Small caps are opening about 0.5% higher. Mid caps also 0.4% up. You also have PSU banks, Pharma, IT also in the green, about 0.5% gains coming in on the IT pack. Oil and gas, metals, consumer durables, FMCG also about 0.2% higher. Top movers on the Nifty, Sun Pharma 1.5% higher. On the back of positive brokerage report, you can see Geo Financial Services 0.9% higher, Eicher Motors that's up by 0.8%, IndusInd Bank that's improving 0.7% higher, Hero MotoCorp, Grasim. These are the top movers. On the downside, you have about 5-6 stocks that are lower. That's Cipla, HCL Tech after the earnings 0.2% lower. Not too bad a reaction. SBI Life, you can see a 1/10% decline. Okay, now we have Eternal that's seeing some profits being taken off after yesterday's move. Ultratech Cement also down in trade. Cipla, ICICI Bank, these are some of the other pockets that are seeing some declines. On the FNO pack, Oberoi Realty, HPCL, RVNL. These are the stocks that are hovering higher in trade. On the downside, Inox Wind, M&M Financial, these are the stocks that are declining in the FNO pack. Indraprastha Gas is another one, and the other one which you can also see is Tube Investments on the declining side. Titagarh Rail is also falling, slightly in trade. Oil and gas is now moving up. You can see the index now climbing about 0.7% in trade. IT index, is also up and about. Now it's the second highest mover in trade right now. Let me quickly look at how the gainers and the losers are placed as far as the Nifty 500 basket is concerned. Let me see. Rallis India after earnings 5.8% higher. Gillette India also up by about 5% in trade. You can also see Venus Remedies is another one that's also moving higher by about 4 to 5% up. You have names like, Visa Steel that's up in trade. You also have names, okay, Shanti Overseas is another one that's also opening higher. Noida Toll Bridge Company, very penny stock over there that's also moving higher in trade. So those are the stocks, I think, very far and few between names that we could really take. On the downside, Tejas Networks, post earnings, I think that's the one that's declining. And you're also looking at some other names, Nectar Life Sciences that's down. You have Anand Rathi Wealth after 3-4 days of run up after the earnings. That's also seeing some declines, 2% odd kind of a fall right now. Brightcom Group that resumed its trading yesterday. It moved up. A lot of investors were interested about this stock. Today again there is a 5% decline. So keep an eye out on the entire space as well. Dharmeshji, how do you see the opening, and what would you say when IT stocks are also poised to move up despite these mixed kind of performances coming in?
But this, I mean, as far as IT stocks are concerned, this is
Yeah.
more of a trading kind of a play. So, end of the day, the profit is there, growth is not there, but ROEs are high. So, people will keep on, trading it. It's more of a trading kind of a play which is happening. But good to see the market in the green. I mean, as of now, the markets are stable, and to my mind, given the kind of a scenario, see, Sakshi, one thing one has to look into the market when you are looking at the current juncture. You should not be looking at this market from P multiple kind of a perspective or growth perspective. The reason why I say so is from that perspective, Nifty 50 may look at 21, 22 times kind of a P multiple, but this is a market when inflation is coming down, interest rate is coming down, then equity risk premium is the main criteria to look at it. And there, the ERP yield, I mean, bond yield to equity yield is around, say, 1.7, 1.75 as of now. And look at the yield ratio is around 1.38, which is lower than 1.5 or from a long-term 10-year kind of average. That provides the flow to the market because the asking rate for earnings growth comes down when the ERP is below 2%. It's only when 2.5 or higher ERP is there, then the asking rate for equity earnings growth goes up to say 15 to 20%. So this kind of a scenario suggests that even 9-10% kind of an earnings growth on Nifty 50 should be fine. So from that perspective, the range which we are looking, I mean, the floor for the market looks to be around, say, 24,500 to 25,000. That's the worst case scenario for us. And upside, if you value at mean multiples of, say, 1.45 or 1.5 on 1 year forward basis, then even 27,200 to 500 is likely on the cards. But that will happen only if there's a light of hope and some on ground demand trajectory picks up. So that's the reason when we started I said that we are looking at this market to buy on whatever declines we get. Only sectors and stocks has to be right this point of time because it won't be a sector kind of a theme. It would be more of a company specific kind of a play which you will get going forward.
Okay, got that. Let me quickly then look at some of the small cap winners. That's the index that's outperforming right now. You have Railtel that's up by 3.5%, Triveni Turbine that's up, Newland Laboratories. Remember, yesterday this stock went up 20% in trade. Aster DM Healthcare, Godfrey Phillips, Amber Enterprises, Sagility India, one of the recently listed ones, First Source, and Nugent Software. Some of those mid cap IT names are actually doing well. You also have names like Zen Technologies, HBL Engineering also moving up in trade today. International Gemological Institute is also hovering higher within the small cap space as well. Dharmeshji, have you looked at Newland Labs? What moved this stock so sharply higher? Would you look at this small cap stock and any other small cap stocks that take your attention?
No, Sakshi, I mean, consciously we are avoiding small cap stock presently because there's a huge divergence when you meet managements of different companies. So, I mean, the theme is not building out there. Some sound very optimistic and very positive about the growth outlook, and there are others who are saying the challenges are there. Net, what we are seeing is in small cap basket, there's definitely a problem out there as far as demand outlook is concerned, both domestic as well as international. So better to have some time, 1 or 2 months if you take it out. No harm in losing that time period because eventually when the things pick up, then small cap performs far better. Overall, if you look at the index performance categorization, we have our proprietary, indexes for small cap, mid cap, large cap there. There, from this financial year, what we have seen, small caps have actually outperformed the large cap and mid cap basket by a handsome margin. So almost 19% kind of index gain for that is for the last 50 market cap, 450 to 500 kind of a basket which is given. And that makes us more, be concerned about the fact because ground level business is not picking up, but the stock prices have moved up. So we are shying away from that.
Okay, fair point. Let me also just pull up a few other pockets for you. Let me discuss the EMS space with you, Dharmeshji. How about stocks like Amber Enterprises, Dixon and Keynes? What's happening here? Is the valuation question again emerging after the recent run up? Do they still have a lot of leg up to really look at this point in time? How are you approaching these stocks?
See, for these companies, if you are approaching from a valuation perspective, you will never be able to buy them because that valuation concern has been there for last 2, 3 years. But they have, delivered a very robust kind of a growth. And going forward, how the government of India is focusing on PLI schemes and forcing companies and giving them incentives to go for making India kind of a trajectory. And the China plus one story has been playing out, having figured everything out. But iPhone 17, the parts have already arrived from China to be manufactured in India. So these things will keep on happening. The noises may be disturbing at point of time, but the entire EMS space for next 5 to 6 years looks very positive and attractive to us. Tariff thing is there. I mean, the US government is very smart. They are finding out where the goods are being routed out. But Indian EMS players are actually manufacturing, and the value addition and OEM part is getting more, margin accretive, and better parts are getting now manufactured in India rather than just the display screens which earlier they were doing. So, to my mind, if you are having a conviction of say 3 to 5 years kind of a time frame, then prepare a basket, both all of it. I mean, it's Dixon, Ember, and Case all put together can be bought as a basket and hold it for 3 to 5 years. The returns would be decent enough. Present valuation multiple may look high, but the opportunity size is far higher than the valuation multiples these companies are enjoying right now.
Okay. Let me just also pull up a few other stocks from some of the other pockets. Auto space, sir. How are you looking at the auto basket as of now? We've had all the positive triggers that we could probably initiate as a country. We've done, RBI rate cuts, we've done tax cuts, and now the nature is supporting with above normal monsoons as well. And, pan-India monsoons that we are getting in time and even before time in many places as well. All of this usually points out to improved consumption, a rural economy uptake that usually, finds its way into the auto sales as well. Do you think this time around things are different? Why do you think the auto space is still lacking some, uptick in the sentiments? Are we waiting for the festive season to kickstart things here on the positive side? How would you approach this?
See, Sakshi, there's a natural, saturation point. I mean, everybody is owning vehicles right now. The penetration level has been quite high, and I mean, there are many families which are owning multiple cars. If they need to, they are having three and four. So that kind of uptick growth, even for two-wheelers, is the same story being played out. I think that is what is biting the industry right now because now the growth has been tapered to a normal kind of a growth. So these factors are already there. But on ground level, when we speak to dealers and all, the uptake is not there as far as B2C sales are concerned. So dealer to retail is not happening to that extent. And till that happens, we won't see a meaningful traction in the auto companies. And they are already disrupted with a lot of new launches. I mean, electric bikes and everything is coming into play. And though most of them are into the listed space, but still there is lack of clarity as to the overall volume growth. For the industry is growing at mid single digit kind of volume growth. So unless that happens, and it's the only takeaway which we are getting is from consumption point of view, the volume growth is still not picking up. So it's all the macro factors are in place, but unless demand picks up, we won't see a traction or a drifting kind of a rally into auto space. Having said that, if one want to venture into a portfolio buy, I think from the two-wheeler space, Hero MotoCorp looks pretty attractive to us from the valuation perspective point of view. And it's already corrected almost 30% from the top level at 17, 18 kinds of a PE multiple. Volumes picked up in the month of June. We are expecting July and August to be equally better for this company, around 5.5 lakh kind of automobile sales going forward. So that should play well. And in the four-wheeler space, we are buyers in M&M. So that's a clear kind of a 15, 16% kind of a good trajectory and valuation wise cheaper than if you compare it to say a Maruti.
Okay. How about Ola Electric, sir? How would you look at that one? Yesterday there was a 20% uptick on this stock right after the earnings. This is despite widening of the losses that we saw from the company. There's further a 2% uptick in trade today as a follow-up move that we are getting to see. This has been a space, this has really disappointed all the investors of the
Yeah.
IPO. The stock went up to 140 and beyond kind of levels, and thereafter it has only been declining 70-75% of crash from the all-time high levels. And it actually even today there are some of the brokerage houses that have actually given a sell rating and a 30 rupee kind of a target as well on Ola Electric, despite the surge that we saw yesterday. Let me just pull up that report for all our viewers to see. Yes, we have a Kotak Institutional Equities report that has a sell rating and a target price of 30. They believe that Q1 losses were lower than estimates, driven by better than estimated volume of take, better than expected gross margin also. There is a reversal in warranty provisioning and cost control measures, but they still believe that the stock can be headed lower to 30 odd levels. How are you looking at Ola Electric, and what is your suggestion to all those investors holding on?
See, we did have an IPO note on Ola Electric, and that time our view was very clear, played for a listing gains. And apart from that, and then there was a clear exit because if you look at the trajectory, the competition was about to, heat up with Ather, Hero, Bajaj, everybody entering into the space. So the first mover advantage they did enjoy, but after that, things have turned, really difficult for them. And for us, it's like a void. I won't say a sell rating. Let this, I mean, it's a evolving and disrupting space which two-wheeler industry is facing. But at the same time, one is there is a natural growth is not coming for the industry as we just discussed a few minutes back. Secondly, the competition from the established player have heightened up. They have pulled up the socks and got geared up. I don't think. It will be easier road for Ola Electric going forward. The management always sounded very confident, but the challenge is far tougher. So let them prove. I mean, let them get their acts together. If they are able to gain market share, then in a clear water one can venture into it. But as of now, it's a void from our side.
Avoid from Dharmeshji's side at this point in time on Ola Electric, viewers. Let's dig a little deeper to the new age tech space. Again, Zomato Eternal is something we'll start off with. It was, lying in a range for a long time. Finally, yesterday it moved up beyond 270 odd levels. What is it that you are looking at, Zomato? Would you see this as a fresh move, again an attempt to reach back to 300 odd levels? What should small or a short or medium term trader do? What should the retail investors holding Zomato for a long time do? Is it a time for accumulation?
See, I mean, if you want to be into this space, Pharma, then you should be having a long haul of, say, at least 5 years kind of a time frame. Zomato has been performing well compared to its competitor or peer group, but again, the space is under quite a lot of disruption, and the problem is the volume growth and penetration into the lower end of the cities like tier 3 and 4 kind of a cities, because tier 1 and 2 other big large international multinational conglomerates are also entering the space, so that will keep the disruption on. Value-wise, I think it is a leap of faith if you, for company-wise, the kind of numbers they are going to deliver and justification of that. Space is attractive. I mean, this industry is bound to be here and it will keep on growing further and further. There is no doubt, two doubts about that. But for price action, I think it will take 1 year or so till like Amazons of the world and everybody gets their fair share, and eventually it will be a three or four players kind of industry on a pan-India basis. That is what we are seeing. Though local competition, as in the case of FMCG, will keep on hitting up. So our sense is, if you are holder of Zomato from a long-term perspective, stay invested. No need to get away, but for trading plays one can go for momentum plays. It will keep on coming and going up. So on down days of 5-7% kind of a correction, one can buy this, and then on up days you can have a exit on the trading plays.
Okay. What about beyond Zomato and Swiggy, sir? Is Nykaa attracting your attention? Do you think things are turning for the better there? What about delivery also?
No, like I mean, same store sales growth is not happening out there. A lot of capex has been done. And even if they are able to gain some traction, but the valuation multiples which they are trading, they won't be able to justify that. And I mean, Avenue Supermarts is a classical case into play. So they did everything went right for them. Initially, the growth rate was also 60-70%, and now it's a natural growth rate of 15-16% kind of a growth rate. So even for Nika, it will is likely to be fall into the same trajectory. To my mind, it's an overvalued stock. You can have a few updates, but wealth creation kind of a stock, I don't think one should be buying into Nika from that perspective.
Okay, fair point. Let me just also reiterate some more stocks that are moving up higher for our viewers to really see. Fertilizers and chemicals, Stamcor is up in trade 5% higher. You're also looking at names like Dream Folks, that's also up. Shanti Overseas is higher. You also have Sambhav Steel Tubes, a recently listed one that's up. Gillette India we marked out. MIRC Electronics is also up by 6%. You have Bharat Gears that's also up in trade. Those are some other stocks that are joining in the party as far as the Nifty 500 basket is concerned. And oil and gas names, they continue to rally. It's HPCL, IOCB, PCL that are definitely pulling up higher in the PSU basket today. Oil and gas, crude oil prices ebbing lower in a comfortable zone. OPEC continuing with its supplies and higher production targets as well. What would you say for the downstream companies back home?
I mean, trading place, I mean, nothing beyond that, because if you
Okay.
look at all the policies in place, so EVs are getting, more and more penetration. At the same time, the government of India policy itself, which is being contested right now, that all ICE new vehicles should not be there after 2040. So next 15 years of phasing out of all ICE vehicles, which they are planning. And same is happening with other, forever power generation. There are few companies which are having such kind of a requirement, but eventually this is on a sunset kind of a clause, maybe 15 years, 20 years. So when things are declining, volume growth is will not be there to that extent, and there is no pricing power. I mean, no matter how much you try, all the wars came and went by. But definitely there is a concern with the pricing power. So downstream companies may enjoy this benefit for some time, but to our mind, again, this is a sector which you can have a trade, but you cannot keep it for the next 10 years in your portfolio.
Okay, fair point. We are 50 points higher in trade. First 15-20 minutes is out, 25,130 with us on the markets. Hero Moto, as was suggested by Dharmeshji, has moved to the top spot on the Nifty right now, 1.7% higher. It's the stock that is moving. As far as Aisha Motors is also concerned, that's also up by about a percent. So autos as an entire basket is also moving up in tandem. Today you have both Tata Technologies and Tata Elxsi moving up in the F&O space. Apart from this, Piramal Enterprises is another one that's moved up higher. 4% up can be seen on this one. Within the PSU basket, you also have railway related stocks that are moving up. Dharmeshji, let's discuss railways. How are you looking at this one? We've enough discussed on the defense pack in the last 2 months odd of our conversations. What about the railway pack? IRFC, RVNL, Railtel, these companies are again talking about order flows that are coming in. There is a slow and steady news flow that's coming in. How would you play this one?
So last year it was all more of a muted kind of a year for railway infra companies, but this year things have again started picking up. There has been traction in the order inflows as well as execution, and fresh order inflows are also coming into play. So the space has started moving up. I think FY26 should be better for railway companies as compared to FY25. Though the budgetary allocation remains the same, but the point is the execution and the fresh orders are trickling in. And there, I think one has to be again mindful of the valuations of the stock companies which you are picking up. Ircon looks to us a better bet than as compared to RVNL, just because of the valuation plays. And again, it's caters to all form of infrastructure development of the railways, platform, railway lining, electrification, overboard bridges, and everything. At the same time, they are also falling into the normal infra space. So 15% of the revenue come from, say, highway construction and all. So diversifying their portfolio as well. So but that company looks better to us. And financials, you can go with IRFC and all. You can buy the financial space as well. But we are more focused on the infra companies in the railway, and there I think Aircon is our top pick out there.
Okay, fair point. Let me just get some more ideas going with Dharmeshi on the program. Consumer durables, that's an interesting space that's picking up some pace at this point in time. You have Amber, which we've discussed. Now, even Blue Star, Kajaria, Crompton Greaves, PG Electroplast, V-Guard, Whirlpool, Havells, Voltas, Dixon, they're all moving up. So, beyond just the EMS basket into the consumer durables, we're heading into the festive season in a month from now. Do you think this space, which did not perform as much as was expected in the beginning of the summer, will it again have some run up this time around ahead of the festive season?
It can be there because if you look at the EMI costs, they have come down. At the same time, the prices has not gone up. Input prices have not gone up, and maybe some trading pops can still be there. But again, here the problem becomes the valuation multiples. I mean, Voltas 1.5 year back where it was, and now where they are trading is far higher, and it's a cyclical kind of a industry. So, but the fact remains that churning rate is high. 1.5 to 2 years, you do get replacement kind of a demand coming in, and to our mind, that replacement demand would be more active this time around festive season rather than the original buying of the product. So, yes, a trading play can be taken, and Voltas is what we like in the space compared to others.
Okay, fair point. So that's as far as the consumer durables basket is concerned. We were talking about the monsoons and we discussed the auto space, but what about the fertilizer space that usually gets into momentum? Today, fact is up by about 7%. We're also seeing some of the other stocks like Deepak Fertilizers and all also 3-4% higher in trade. Is this space to be played only for cyclicals, Dharmesh ji? Do you think there is enough mirth here? How would you advise an average retail investor wanting to go big on the fertilizers and chemicals pack?
I mean, as far as agri space and the fertilizer space is concerned, it's already a fully, exhausted space. So cyclical plays are only ones which play out here. So one is the monsoon factor, and other is just before the budget, you see a spurt coming into these companies. Structurally, they have been doing well. The growth trajectory has been good for most of them, but it's like a single-digit kind of a growth, and that is how I mean consumption of fertilizer can take place. The moisture content in the soil has been good this time around, and that's good for all the fertilizer companies. We saw the numbers of Rallis India. It was a very good set of numbers which was reported, and we are expecting others to report the same set of numbers. And they're just going by again the valuation multiples, though everybody is likely to perform well. Chambal Fertilizers provides a much better cushion from a valuation perspective. So that remains the topic, and there are a few others, but restrictions prohibit me from taking the name.
Okay. One more pocket, Adani Group stocks is I wanted to discuss with you, sir. A few more, last few days we have actually seen some momentum built up across the board. Adani Green, Adani Total Gas, Energy Solutions, Sports, Power. You can see across the board there has been some momentum. But again, nothing substantial that really drives our attention to the whole space. How would you read up when such a conglomerate really moves up in a steady and slow pace? All the kind of hindrances of the past are on the behind. We have already seen the company stepping up the gas, talking about more investments going forward, getting back on the radar when it comes to their expansion plans. How would you look at the Adani Group?
I mean, it's more of a proxy of economy. I mean, the every area they are functional, and but that's the same happening with the Indian economy. If you look at any other company, the same peer group. I mean, port. If you Adani port, you compare with other port companies of say power. You compare Adani Green Energy with say NTPC Green and others in the place. So every company is having the same story. It's a structural kind of a thing where there is more of a pause kind of on growth. I mean, growth pause on the earnings trajectory, and that is what even Adani Group is struggling with. Few businesses are great, and few businesses appears to be great, but the valuation seems to be very high. But I mean, two companies which we think offers you a value buy is one is the Adani Green Energy and the other is the Adani Ports. So those two companies looks to us much on a solid footing. Though valuations one can argue, but if you are having a long gestation period of say again investment call is there 3 to 5 years, then they look pretty reasonably priced at current levels.
Hmm. Dharmeshji, let's also focus a little bit on the primary market space as well. Two IPOs that are opened up. Have you looked at them? Have you covered any of them? SmartWorks, as well as Anthem Biosciences IPO that opened yesterday as well. Anthem is slightly larger, but a complete OFS 3,395 odd crore rupee IPO, whereas SmartWorks is just about a 570 odd crore rupee IPO. How are you looking at these two IPOs? Do they present any opportunity?
Yeah, we did have a look, but chose to skip with them from the, though there may still be a listing. Yes, the last IPO which we covered was Kryzak. I mean, that was there we did found some value out there. But normally, Sakshi, what we do is when there's a OFS kind of a scenario, I mean, major money is going in the OFS kind of format, then we tend to avoid such IPOs. So
Okay.
that's the reason.
We will also see the listing of travel food services, and of course, it's listed and Dream Folks, just in the same basket that we have seen. How have you looked at that scenario? Dream Folks, of course, has been a laggard. We've seen an impact, and further with the competition rising, there was further impact on the sentiments on Dream Folks. Today, it's up the stock, but how would you look at these two? Do you see a lot of opportunity for food outlets, at airports, this is what they're looking at, and lounges? How is this space really growing? We still have very few players in this space, but probably it will be the airport companies themselves that will be expanding into them too. So once an Adani group decides to launch their own outlets and have their own chains, this is only going to rise further. But of course, with the surge in air travel, with the government's focus on creating more and more airports and connectivity in the country, how are you looking at this space, sir?
See, what happens if something new comes up, there's always a premium given to new age concept kind of a thing. But see, end of the day, these all are plain vanilla food business, right? Food catering. You may offer a food in a five-star hotel or on a, your local restaurant. So, to my mind, much talk was centered around that business class and executive class and the five-star kind of environment which these lounges offer and the quality of food. But if you look at the margins and all, it's 15-16% kind of a margin business and with a growth rate maybe in high teens. But beyond that, the competition is hitting up. You've already highlighted the key factors which may be a hindrance to the growth trajectory going forward. So sensitivity is very high. I mean, the consumer sensitivity and preferences change very fast. So to my mind, everything is fine. They have been doing well right now, but the valuations at which these companies gets listed and the premium which they try to command, initially you may still get it. But 2 years, 3 years down the line, these valuations are not at all justifiable for such kind of companies. So, and that's the reason why we did not cover these companies from the IPO perspective. So, Travel and Dreamfolks both we have not been covering. In this space, we are observing, looking at it. But again, to my mind, it's not an investment or a portfolio kind of buy ideas.
Correct. Okay, fair point. Dharmeshji, we will thank you then on that note for addressing all of these concerns when it comes to the dampness in the sentiments across various sectors. Where are the opportunities to be found? We always appreciate your presence with us,
Thank
with
you
your
so
deep
much.
insights in the markets that really help all our viewers. So thank you so much for
Thank you.
giving us your time today. 25,110 on the Nifty. We've started off on a fairly better foot than we talk about yesterday and last few days, because we've had 4 days of losses already. Let's hope today is a day when we actually kickstart an uptrend as well. But do stay tuned. Throughout the course of the session, you will get to hear from earnings conversations, market coverage, and I'll be seeing you at 12 noon for daily calls addressing all your stock related queries. So stay tuned for that. Many thanks for watching.
आज का भारत अभी भी सारे जहां से अच्छा दिखता है।